Good afternoon, and welcome to the end of week market review for July 12th, 2013. You're going to see that our U.S. markets are currently rising bullish, while our Canadian markets are currently flat bearish. We're going to cover a few things off in today's presentation. First off, we're going to take a look at the market news, just see what's been going on and how it's been affecting the U.S. markets. We're then going to go ahead and take a look at some economic reports. With that, we're then going to go ahead and do some technical analysis. While we're looking at some daily and weekly charts, we're going to be looking at short-term and long-term support and resistance. We're also going to be looking at the S&P 500 and the TSX. Finally, we'll be looking at the volatility indicator just to get an idea of how much volatility is in the current marketplace. So we could see that the markets definitely did end up having a good week, despite a few hurdles that it had to overcome. One of those hurdles was that the jobless reports did end up coming in a little bit higher than expected, but that was offset with some easing from the Federal Reserve, as well as some optimism around the upcoming earnings season. Currently, the Dow Jones is up 2.17% from last week's close. When you look at the S&P 500, you're going to see that it is currently up 2.96. Going ahead and looking at some commodities, we can see that we pretty much had gains right across the board. We have oil up 2.53% from last week's close. This currently puts it to $106.25 per barrel. We've got silver up 5.36%. This currently puts it to $18.86 per ounce. We have gold up 4.71%. This puts it to $1,280 per ounce. Now, we did end up with a slight decline out of the US-Canadian pair. It is currently down 1.65%. This puts it to 1.0404 pips. All right, so taking a look at the economic reports here, you can see the few things that happened throughout the week. Most importantly, obviously, was from July 11th, where we had the jobless claims. They were expecting 345,000 filings. In return, they actually got 360. So it's quite often that we see that it's meeting or exceeding what they wanted. Unfortunately, every so often, we do not. And this is an example where we ended up with more claims than we wanted. All right, right now we're looking at the S&P 500 on the daily chart. You're going to see that we've broken through some overhead resistance that was put in place way back here. On Thursday, when it broke out, we were excited to see that happen. Obviously, though, on Friday, when we saw that it continued to stay above there, we were even more impressed with what we saw. Now, the MACD is rising bullish and with the black line over top of the blue line. Unfortunately, though, we don't really have a whole lot now to reference to. There's no cycle highs or trend lines that we could reference to for profit targets. This does mean that the S&P 500 is in an overbought state and could very well pull back at any time. Unfortunately, this has been not the case when you look back and see where the S&P 500 has been going for several months prior to this. So we really don't know where the markets are going to go right now. What we do know, though, is that whatever happens during earnings season is going to be the number one contributing factor to the overall outcome. Right now, we're looking at the S&P 500 on the weekly chart. This kind of just adds a little bit more perspective to what we see here. We can see that the S&P 500 really has been in quite the rise for quite the time. And although we did have a little bit of a dip for these last several weeks, this has happened already in the past a few times, and it really didn't affect the overall returns. Here we've zoomed back even further. You're going to see that the S&P 500 really is at an all-time high right now. We haven't been this high, or we haven't seen these highs since at least 2004. And if you look over here way at the left-hand side of this chart, we can guarantee that 2004 and likely 2003, we didn't have anything anywhere near that high. So with the data that we have, we could very confidently say that the S&P 500 is really in some uncharted territory. All right, here we're looking at the Toronto Stock Exchange back on the daily chart. You're going to see that we did end up with a bad couple of days here, and this was after hitting the overhead resistance. Once it hit that overhead resistance, it just seemed to fall back and into between the two trend lines. Where it's going to go from here, it's hard to say. Likely it will end up following the S&P 500 loosely, but we do have quite a bit of room down to support which it could go down to, as it already has a few times. Currently the MACD is flat bearish. The black line is over top of the blue line and is very close to being bullish. So it's very possible that we could end up with a bullish trend. If that does happen, we're going to wait to see a breakout above this trend line and preferably even the 200 EMA. At that point, we could expect that we'll continue that upward trend. Now we've got the TSX on a yearly chart where we're looking at about a year's worth of data, and you can see that overhead resistance again. We really do want to break up above that overhead resistance and then break out above the 26 and 40 EMA. From there, we could see better trends. It's also important to note that while you're looking at this, you can see that we really have not had a stellar past. Not like the S&P 500, where it's continuously been growing. The TSX has been making some small gains, but we've actually gotten cycle lows trending lower recently. So we're going to wait at least another 3-4 weeks before we could confidently say that the TSX is an uptrend. Here we are looking at that weekly chart, but going back to 2002, you can see that it's got very large milestones that it's going to need to cross before getting into its all-time highs. It'll need to break one over here around 14,000, and then again another one here around 15,000. If we can manage to break above those though, we'll definitely be seeing the TSX in a completely different set of eyes. Alright, with the last of our technical analysis, we've got the volatility indicator. Currently it is at 13.84. This puts it down 7.05% from last week. With it at 13.84, it's definitely in a good, comfortable trading range. In the past, we've seen that it ranges between 12 and 14, so this is definitely a good thing to see. Obviously, though, as long as it stays below the 200 EMA, things will continue to look pretty good. If you have any further questions, make sure that you either contact us via email or our phone number, both of which are listed on the screen. So again, this has been the end of week market review for July 12th, 2013. Ciao for now.